Yo, hey, YouTube fam, it's your boy, Steve. I'm back with another video. And today we're going to be going over the famous stochastic indicator. All right, man. As always, make sure you like, share, and subscribe to my YouTube channel. If you're finding value, always leave a comment. It's the Wall Street family where we elevate, motivate, and make money daily. So let's get into it, man. All right. So a few people asked me to do a video on this indicator, right? The stochastic indicator, one of the most popular indicators in the world, right? Let's go to indicator. Let's go to stochastic. Be honest with you, I'm not too big of a fan of it. I don't use it often, but again, like any tool, with proper information, proper education, you can use it effectively. You can use it in your trading strategy to help you, become a better, more effective trader. All right. So let's talk about it. All right. So the stochastic indicator, right, is a momentum indicator, believe it or not, right? It's a momentum indicator. Okay. And I'm going to be also debunking a couple of myths because a lot of people actually use this indicator wrong, right? Well, in a sense, it's not wrong, right? Because of how they were taught. Like literally, you go look up the definition of stochastic. You can do that on your own. Pretty much people use it, when price reaches these overbought, oversold territories. But that's honestly not the way you want to use this indicator. All right. So what is it made of? All right. So there's two types of indicators. There's a fast stochastic and a slow stochastic, right? Notice it has these two lines. All right. It's called the K% and the D%, these lines right here. And you could always look at the settings, right? So you got the K and then you got the D and then you got the smooth, right? So what do they represent? They represent how fast this indicator is going to move, all right? So basically in a strong trending market, the fast indicator, right? And you'll know how you have a fast indicator because based on the settings. So some of the typical settings for this is like 335. That's very common. So you see this, it'll be smooth 3, D3, and then the K would be 5. And then a strong indicator would be basically the standard, which is what a lot of traders use, 14, 3, and 3. Those are the most common use, right? So what do I mean by fast? So basically the fast is for traders who like to be in and out of the market, all right? So if you lower your settings to like 335 or 338 or whatever, right? To me, it's all relevant based on what you're trying to accomplish. So if I'm trading like on the 15-minute, all right, and I change my settings to 335, that means it's going to give me a lot more opportunities to buy and sell. So for those who don't understand how this works, all right, so basically the indicator works based off of overbought and oversold price. So basically when price is overbought, you're looking to sell. And then when price is oversold, you're looking to buy. But the thing is, because it happens so rapidly, right, you got to be careful when buying and selling at these overbought and oversold territories. To me, these are actually not when you want to buy and sell, believe it or not, right? This actually goes against popular opinion because, again, this is why the indicator is used. It's kind of like the RSI. When it reaches these overbought, oversold areas, you're looking to buy and sell. But the problem is, just like the RSI, right? Price sucks when it's in a trending market. See, when you're in a trending market, did you want to sell here? Look at that. You would have lost, right? Look at here. You would have lost, right? Now imagine this on a higher time frame when you're in a trending market. Look at all these look at price telling you to oversell, sell. These would have been losing trades for you. All right. These would have been losing trades for you. The best time to use the stochastic is when it's in a consolidation, basically when the market doesn't have high volatility and the market is just ranging. So this would have been a perfect sell right here, right? Got this consolidation going, boom, you would have had a successful trade. So again, you never want to really rely on this indicator when you're in a trending market because it will screw you up, right? Look at that, look at that, look at that. All right. So what you also need to know about this indicator is that, basically, so for low values, right? For the stochastic, we'll make it overly when you have it low. So basically for people who like my intraday traders, my scalpers, all right? I'm talking to you guys because you guys love using this indicator. You love to get in and out because it gives you so many opportunities. But keep in mind, right? Like I said, in a strong trending market, the fast indicator isn't able to filter out the noise. All right. So it's giving you a lot of false signals. All right. So low values for the stochastic will make the indicator oversensitive. So even with the lower ones, right, the settings will offer a lot of signals, but it also comes with a lot of noise. And hence why you have all these false signals, false signals, false signals, right? All these false signals. All right. Very, very important. Now, some of you guys are saying, well, all right, Steve, what about if I have it higher, like the 14, 3, and 3? Yes. All right. Now, a stochastic with a higher value, right, will make it less sensitive to market noise, which is me personally, my preference, because I'm a swing trader, position trader. All right. This will lead to fewer signals, right, because now the indicator is smooth, but you miss out on a lot of opportunities. So it's kind of like finding a balance. All right. People are always searching for that golden indicator or what's this perfect settings. Guys, there's no perfect settings. I can't explain this enough. There is no perfect indicator. All right. It's a tool, just like any tool. The more you understand it and the more you understand how the market moves, the better it will be for you. All right. So all in all, if you want more signals in a trending market, basically have lower settings. So instead of 14, you can switch that to 5, 8, 3, and 3. All right. And this works especially for intraday traders and scalpers because, you can operate off the 15-minute, pick a time frame, and then, there you go. There's your buy. Boom. Just find a trending market. There you go. Every time price is in overbought, oversold, you got all these buys. So you're in and out, right? And then if you're a swing trader, then you want to go on the higher time frame, preferably I want to say 1 hour is higher, it's like medium, but 4 hour and daily. All right. So for swing and position, go with the higher settings. For scalpers and intraday, go with the lower settings. Now that we got that out the way, we understand what the whole purpose of this is. We understand the K and the D and what's the difference between higher settings and lower settings. So lower gives you offers more signals, right? Definitely you always want to have a strategy with it. Higher, less signals, right? Keeps the trending moving. So higher for my swing position traders, lower for my intraday scalpers. All right. So Steve, how would you use this indicator? Well, pretty simple. All right. So what I like to use with this indicator is to spot divergence. All right. That's what I really love indicators for. As you guys know, I love using like the MACD indicator. So I love using it because I can spot divergence. So basically, for those who don't know what divergence is basically when price is going one way, your indicator is going one way and price is going the other. So for example, notice how this was going up and this was coming down, right? Notice how this was coming down, this whole thing. So it gives you insight of basically when to buy or sell. Now, notice with the two lines, and this is another thing that a lot of people do. The moment, right, you see the K line cross over the D, right? So the blue crossing over the red, or I should say orange. This is where most people would enter the trade, all right? Now, not so fast, all right? Remember, you don't want to get caught up in false trading, right? You don't want to get in a false signal. So if you were to start selling right here, you would have been screwed. You would have been screwed because clearly this went up, right? So how I like to use this is basically, all right, after price, right? Once I spot divergence, I want to see price break out of this. Again, an indicator only works if you have a strategy with it. All right, if you have a strategy with it. So you see how I identified divergence early on. I see I'm getting divergence. See, price is coming down, it's coming down. Price didn't start coming down until right here. Boom. See that? What I do is I compare. See that? If the signal is dropping here and I see price is not dropping, price is not dropping, price is not dropping. When it finally does drop and I see it goes below, right? These areas right here, all you have to do is look left, compare, compare, compare. What I wait for is when price comes back up, right? So you see how I kind of like basically implemented and it gets into an overbought, and I'll show you an oversold scenario. Then at this point, see, so basically all I'm doing is I'm waiting for this to come back into overbought territory. And now, same thing, I'm comparing, right? Because clearly when this was dropping, it wasn't breaking the previous, right? When it was in that overbought territory, See that? So when this broke down, it finally broke all these previous overbought territories. So now all I'm waiting for is when price gets into overbought again, above the 80, right? I'm sorry if I didn't explain this early, right? So you have 80, the stochastic explained by 80 and 20, all right? So basically when price is above 80, you're looking to sell. And when price is below, when it goes below 20, you're looking to buy, all right? But again, if you just use that in its traditional form, I promise you, you're going to lose a lot of money. Like I had to learn that early on in my trading career. I used to do that all the time. As soon as it was above 80, I would start selling. Below 20, I would start buying, and I would lose. So you want to prevent yourself. So again, I want to see every time price goes overbought or oversold, is it breaking that previous? So as you can see, boom. So when it gets into overbought territory again, see, it didn't get over there, right? I want to see the two lines cross over, all right? Let me erase this. I want to see the two lines cross over. What I'm showing you guys is a strategy, all right? Remember, indicators only work effective if you implement a strategy with it. So the two lines didn't cross. Don't think this was a cross. This was a cross. Boom. See the two lines? And again, I'm comparing. So now, once I compare and I see, oh, okay, now this is where basic market structure comes into play. Do I have higher highs or lower lows, right? I got lower lows. So now I'm looking for a sell. Now I can implement the cross of the K and D. So when the blue crosses over the orange, I can look for my sell. All right, I mean, I can look for my sell. And then when the blue crosses above the orange, I can look for my buy. All right, and it's as simple as that. So again, what I want to use the stochastic for is to spot divergence, right? So for example, I'm just getting divergence here, right? Price is coming, and what does price keep doing? Keep going up, keep going up, keep going up, keep going up. So what I want to see is price breaking that previous, right? Or we keep going down and down and down. See here? Price is getting lower and lower and lower, right? So what I want to see is, see, when this comes back around and gets into oversold territory, see that? I compare, right? So guys, in a nutshell, you're just comparing the lower lows, you're comparing the higher highs against each other. So I want to spot divergence, all right? Once I see this is no longer lower than the previous low, all I'm waiting for is that signal crossover. And then, boom, wait for the blue, basically the K, to cross over to D, and then I'm in for my buy. So I will enter here, place your stop loss below, or you can go below the previous low. All right. So my stop loss would be right here. Entry here. And then based on your market markup, there's my buy. So, right. So people always ask me, where would my take profit be? Guys, when I'm looking for a buy or sell, so in the training market, I'm writing this to the next resistance zone. Just like if I was looking for a sell, I'm writing this to the next support zone. So my sell would have been here. My TP would have been here based on this time frame. See that, guys? And this is how I would use the stochastic indicator. So I would identify divergence, identify where I see prices. Hey, indicators are great for identifying divergence. I see divergence happening, and then I'm just comparing the overboughts and the oversolds. So I'm comparing the oversolds against the oversolds and the overboughts against the overboughts, right? Okay, and that's how I would effectively use the stochastic indicator. As always, if you just use the indicator in itself, by itself, thinking that, oh, every time price is overbought or oversold, I can buy or sell, you will lose. No settings will protect you. All I did was in the beginning explain to you the difference between a fast stochastic and a slow stochastic. For faster ones, this is for my intraday traders, my scalpers. You want to lower your settings. For people who don't like to scalp, who don't like to intraday trade, then keep it higher, right? Yes, you can raise it to, 14 is standard. You can go higher than that. But to me, like I always tell people, it's all relative. It's how you use the indicator is what's going to determine whether it's going to be effective or not. All right. Don't use it in the traditional way. Overbought, oversell. I've really never met a trader who trades like that and is effective with that indicator. Actually, that's a big, pretty much myth right there. Those are the worst times to buy or sell. And again, it works best when it's in a consolidation, kind of like the RSI. If you're going to go based on overbought, oversold, make sure you're in consolidation. If the market is not in consolidation, you do not want to rely on this, right? So see right here, this is consolidation. So this would have been the perfect time to sell. This would have been the perfect time to buy, right? Even right here, got this small little buy right there. So only when it's in consolidation. But when it's in a trending market, you will get killed. I promise you. See, look at this. All this time. If anything, when it's overbought like that, that's price telling you we're in a strong uptrend. Or when it's oversold like that, we're in a strong downtrend. So if anything, you want to continue riding the trend, right? Drop down to a smaller time frame, wait for pullbacks, and then keep riding the trend. But never, ever, 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 ever think this is the time to sell or time to buy. You will get your ass kicked. So that's basically it, guys. All right. So it's like I said, stochastic, one of the most popular indicators. A lot of people use it. Just keep in mind, remember, the more you understand an indicator, the better you're going to be a trader. And most importantly, once you understand market structure, the better you're going to be at implementing this indicator with your strategy. All right, guys. Remember, I got my Telegram link at the bottom of this channel. Just go into the description, find the Telegram chat. Every now and then I'll drop some trade analysis. I'll also be dropping like my morning sessions that I'll be trading with my team. Okay, guys, make sure if you want to get inside the Wall Street family, man, my family is going to be trading this week. We absolutely kill it, man. If you're going to be a successful trader, you have to be in a community with other like-minded traders, right, guys? It only makes sense. How do you think you're going to be successful if you're not surrounded in a community of other traders, all right? We get to discuss things, right? Have conversation, do chart markups, all the things you need in order to be successful at trading, all right? As you guys can see, I'm giving you a little insight. My students, they're always perfecting the craft. You have to perfect the craft. And if you don't, I promise you, you will not be good at this. All right, guys. So that's it for now. As always, please drop some likes, comment below, share this with others who are struggling out there. If you have any questions, concern, definitely shoot me an email or hit me up on Instagram. It's your boy, Stevenson Lindor. Mentorship is key. You will not be successful just watching YouTube videos. You need mentorship. You need guidance. The same way a medical student needs doctors, right? Same way a pre-law student needs other lawyers to learn from. If you want to be a trader, you got to learn from other quality traders. So it's your boy, Stevenson Lindor, with another YouTube video, Wall Street Family, where we elevate, motivate, and make money daily. I'm out. Take care. Stay blessed.